Okay, so hello, uranium friends. Shout out to the uranium squeeze room. These are the top 10 tickers that got voted on over in the room. Now, if you're interested in uranium and you're not involved in the Reddit uranium squeeze subreddit there, check it out. Don't be deceived by the name. There's a lot of good fundamental stuff going on the main page. They also have a pretty active chat. So let's just get right into it. We're going to kind of focus a little bit more on short-term stuff today because the past couple of weeks have been pretty good for the uranium sector in general. So we're going to start off with Urnm here on the daily chart. Now, just a reminder, and I'll flip back and forth as we go through, but I am on log here. Okay, so if sometimes there's big differences when you switch over. Like here, when I go to linear, it's not much of a big deal, right? That maybe some fib tests have changed and whatnot, but we're going to stick with log at the moment. Okay, so if you all remember, I entered into a half position trading position. I do hold a core, and I will continue to hold core. And as we recall from a couple of weeks back or whatever, we had this daily falling wedge, and we had this little bit of the inverse head and shoulders look. And I detailed that trade also in our weekly chart guys production called Uranium Talk. So, and I'll link that down in the description here. So if you haven't been following us on chart guys with Uranium Talk, I would suggest for you to check that out as well. But here we are on the daily, and we have gotten through the 200-day moving average, which is good. And we're kind of using it as support. Fantastic, right? So we have not taken out this whole zone of resistance here. So technically URNM is still range bound at the moment. So we're going to see what this week gives us, but 3581 is our little spot. Now, just to keep an eye on things, we do have a gap right here, and that gap it fills if it gets to 3687. So, I've always said it, and I still do. Gaps like to get filled. So I have a little bit of a positive outlook here because I like to see the gap get filled. And sometimes these gaps get filled and then they reject, but we don't know. Okay. I don't predict the action that's coming up in the next couple of weeks. I only can tell you what I'm seeing and maybe some signs of momentum shifts, which we've detailed multiple times. But here we are on the daily. We're still technically in a bit of a range. We're coming up against this 3581 resistance. It's starting to look a little bit tired here. The only good signs that we have is that we've got these lower wicks, and we still have this looming gap below us that it's probably going to want to get filled also. And if it does, it's going to be really, really good spot for healthiness. And it's probably going to be my second half add over here, depending on the rest of the market conditions, not including uranium. So, if we still have our 2-week inverse head and shoulders on SPY and it still keeps going, well, I'm going to be more inclined to buy the dip here. But I'm still in that half trading position, still holding a core. We are up above this 200-day moving average. We're still in a range. It's had one heck of a move. I mean, if you really just want to, from this bottom, this is why we bottom fish. Yeah, 18, 19% move. Yeah, let's call it 19% move it made on this run. So, this is what uranium can give you. It can give you some pretty good moves over a pretty short period of time. It could also take it back from you as well. So, this daily wedge, I can actually get rid of it now. I just wanted to keep it for the purposes of this video. Just to show you. So, again, what prompted me to enter that trade? Well, I had a couple of technical things lining up, which was pretty cool, right? And we talked about it. We had the inverse head and shoulders, and we had the falling wedge. So it was worth a shot, and that's why it was a half position. I mitigated my risk with a half position, and I was able to identify my area where I was getting out of that. I think it was actually this double bottom was going to be my stop at the time. So that's the deal. We'll just quickly look at the weekly. It's not going to tell us much different because, again, we're just still range bound on URNM. So it's just what it is. Okay. The daily looks good. But in contrast, now we'll go to URA. URA has actually, excuse me, taken out this 2198, which was like basically the last line of defense on this daily pivot here. So as far as taking out the top of its range, URA has done so. And let me just double check something here. What's the high here? 22. What's this low? 27. I'm sorry. 09. So URA has filled this little gap here, and URNM has not filled this gap, and they both created the gap at the same time here. So interestingly enough, if URA gets some continuation this week, I'm expecting to see URNM to do the same. But the look is a little bit better here, and in my opinion, it makes a little bit more sense because institutional money, bigger money, looking for liquidity and a good options chain is going to much rather be in URA as opposed to URNM. Again, I always hypothesize that URNM did that split because they want to get some more liquidity into that name and maybe get the option chain going. But that's where we stand here. It did take out this pivot high here, which is a nice little sign. And it didn't just immediately reject, and we have the lower wicks for buying. So it looks positive in the short term at the moment. Real quick at the weekly. Yeah, so again, it's taking out this range. So, if you're playing a weekly chart, you no longer have any resistance up until 2434. So I think that somebody had posted that they thought that once it got out over 22, it was going to be off to the races. You still have to deal with this resistance here, which is $2 away, which is another 10% away. So yeah, you could probably pull a 10% move more out of this into this resistance, but this is going to be the new key resistance. Unless you start looking at these little pivots here. So it gets a little choppy up here. It's fine. This is kind of the area where we're targeting next. So let's just, 23 to 24 is probably going to be the next spot where we could run into some problems, right? And if we look at this volume profile, you get a little bit of an air pocket, and then you get another volume resistance up at 26. But right now, URA has a little bit of an advantage over URNM in that it did take out this range. Something to keep an eye on. So again, if you're the laggard player in the ETFs, you're going to say, well, URA did it. The charts look similar. Maybe URNM gets a little more juice to it. Time will tell. We'll probably know this week at some point. Denison, really, we'll just, I'm starting with the, I'm going to go to the daily because we've had a heck of a move here. And, it's running a little bit hot, but nothing too crazy. If you look at the historical RSI, it gets up here and it rejects, but we don't trade on RSI alone anyway. So no gaps left behind. Really good, great move. Lower wicks. A lot of the uranium names look very similar to this. They don't all have these big green bars like Denison had, right? But you look at URA. Same look, right? You get that run up and now a little bit of a sideways consolidation. You are an NM, you same thing, run up a little sideways consolidation. So what are we looking for? Here's the deal now with this stuff, because now you start to look because the space does kind of run together, right? So yeah, you're going to have some intersector rotation inside of these moves, but if all of these charts kind of look like this, and one or two of them start breaking down, that's going to be the sign for you to maybe start looking the other way. So, but at the moment, DNN looks fine, right? It took out the resistance. It's using it as support. So next up, it depends on how you want to look at pivots and all these things, but you're going to have a 140, you're going to have a 143, 144. So for me, for my purposes, I'm going to mark this. I'm going to set my alert at 140 because it would be interesting to see if it gets there and gets through it, But the real true pivot for us is a $1.52. Doesn't look horrible at the moment. I mean, this is a great move, and it was a solid. It was one of those solid moves that just didn't have any pullback. So this is a great move too, right? But it had one heck of a pullback for those who were thinking about FOMOing and didn't. It didn't get this bar, these pullbacks. Normally it does. Here it didn't. It just kind of went straight up. So you know, if you're feeling FOMO because you don't have a position in Denison, well, you're obviously waiting for a pullback. And we want to see what pullback and consolidation looks like so we can set some levels to work off of and to reduce our risk for our traders. But looks pretty good so far. UEC, we're on the monthly. I don't even know why that wedge is there. Hold on, let me look. Yeah, so UEC on the daily here, it's in a rising wedge. So, typically the rising wedge is a bearish pattern. There's just no two ways about it, but it doesn't mean that it can't break bull. It obviously can, right? Anytime it can do that sort of thing. So we're keeping an eye on this now. Early on when we started identifying these momentum shifts, it was NXC and UEC that kind of, for me, were showing the early strength down here. Okay, so now I'm kind of looking at these guys to see what they're going to do. Like UEC, how does UEC resolve with this rising wedge? Does it keep bouncing off of this support line and kind of chugging along? Eventually, it resolves, even if it's at the end of January or somewhere in that area. We'll figure it out. But for as far as the metrics we're using now, the 200-day, it got over and it quickly got down below, and now it just closed right on it. So that's another metric that you can kind of keep your eyes on. It came down again to this new daily higher low here, and it got bought up there. And this is right where the 12 EMA is. So, it doesn't look horrible at the moment. Nothing in the space looks horrible, but there's a slight yellow flag for me right now because this got over that 200-day and it's in a rising wedge and it kind of pulled back down again. So we're just kind of tightening up here and we're going to have to see where the consolidation goes. Yeah, the weekly is really, technically all these, with even this move that we just had, we're range bound. We're still range bound. But the action is good. The volume's not super impressive. This is impressive volume. This is all impressive volume. This is not. So all these little clues become indicators for us to see, to make an assessment as to the health of the space. Right now, the space is healthy. My problem, I guess, with the space is the fact that there is very little volume. It doesn't mean that it's going to change my view on my support and resistances and my bullish outlook in general in the long term for sure. But I'm slightly cautious here. So what am I going to do? Am I going to sell my cores? No, but maybe I'm going to start thinking about selling some calls against the positions that I'm holding. Maybe harvest some gains to see how it reacts in this wedge. It's just another approach that I can take with this name. I'll add to my position when I get a decent pullback. 356 is really going to be my be-all, end-all area, but we're not there yet. We don't have to think about it. AMLI, so American Lithium, sorry about the coughing. The American Lithium got their NASDAQ listing. This was like a little bit of the run-up into it, and then they got it. So, it's running hot right now. I'm not really interested in chasing it. If you look at this daily, this is what they call an RSI divergence. I do not trade divergences by themselves, but I do obviously, I look at it and I notice it. So, it got oversold at this high, okay? And, it got a little bit of a pullback and then it got even higher. And there's a slight RSI divergence here, okay? So then it started making it up and clearing up that RSI, but then it just made another ripper. So it's the RSI divergence kind of really did resolve itself here, which was good, right? You could see that it was a slight divergence there, and then it had its pullback, and it's resolved a little bit, but it's for me, it's running hot. So I don't really want to just FOMO into this thing. I don't need to. There's plenty of other names I can play. I'll see what happens when this gap comes into play. Maybe I'm going to even put an alert here on this gap. If it gets into this gap, it's going to let me know that's what it's doing. And that's probably pretty much all I'm going to do with American Lithium until something changes. So if it gets over 350, I have an alert set there, and at 256, I have an alert set there. So then I'll start making decisions when one of my alerts go off. But it looks good, right? But it's running hot. So let's just take a quick look at the weekly here. Yeah, so the weekly is putting in a nice little double bottom. It's a W. They call these a W formation. The technical traders, they can say, hey, look, it's a 120 to 271, so it's a 50-cent move here, basically off this double bottom. So you can add 50 cents to this, for lack of a better term, neckline, but the apex in the W. So that gets you to 320. So if people are playing this pattern, they're going to be looking to target 320. So, and it's like already through there. So your next resistance is going to be 350, and then after that, it's chopperama. But the good thing is that there's not a lot going on as far as supply is concerned up here. So not a lot of bag holders to try to unload on people on the FOMO buyers, but I am not a FOMO buyer, so I will not be involved in that. But that's American Lithium. I've got my eyes on it. It's in my uranium watch list. I have played it as an F ticker for the past couple of years. I will play it again. I like the fact that it's on NASDAQ now. Hopefully it picks up an option chain, but with lithium and uranium, probably a good bet that this one's going to be a good player for the foreseeable future. Anybody who's smart with fundamentals can add to this and tell us how good the company is, I guess. Centrus, LEU, here's the monthly. These monthly log charts put a lot into perspective. So look, if you put it on linear, it's like, oh, right. So we're on log now, and just the monthly, it's just a tightening range. I mean, it's basically what it is. And it's really at the bottom, closer to really maybe, I guess, the midline of this range. I mean, if you were going to frame out this range, this is probably how I would frame out this range, so from 23 to 52, 55 rather, and you're at $36. So, I mean, you're right smack in the middle of the range. When you're in the middle of a range, it's a crapshoot if you go long or short. Who knows where it's going to go? So, you like to see being close to levels that you can work off of, and it's not here, at least on the monthly. So at the daily, I mean, this is a very typical LEU thing to do. It just grinds its way, and we could see it over and over with this name. It's just a little grinder. That's why, again, I took a a trading position here. Off the top of my head, I don't have my broker open. I forget where I got it. I think I got it like somewhere down here, like the 33. The mid 33s or 34 range. So I've just been riding it. I took 30% off because I wanted to be able to have a break even stop out at this low here, and I'm pretty close to that. So I took a little bit of a piece off, and when I'll see how things happen if it gets up to 38.92 area, because this thing has gotten through a lot of this chop zone here, and it's it looks like there's a lot less resistance coming up until we get up into this area, at least into the daily. So you can get another buck or two out of this, the way it looks for now. LEU has a tendency to just tear your face off in both directions, so I'm always careful with it. But that's the deal. I mean, a nice little piece of consolidation here. The next daily consolidation, we want it to look like this, and if it does this for me, and gives me a level to work off of, there's nothing that says I might not add that 30% trim back on and then just hard stop it at that level. But I'm not there yet as far as the action on this name, so I'm just kind of letting it go the way it is. So I am just riding my traders up until they tell me not to. All right. Global Atomic. So again, monthly log scale, right? So And just as perspective, you look at the linear scale, it doesn't look half bad either, right? So, global is a darling of the space, and everybody loves it, and it's not going to give you much in the way of opportunity for entries, So I'm not really flipping around on this name. When I get a really good move, I take a very small piece off, and then when I get moves like this, I kind of try to add, you know. So, but monthly, it looks fine. Again, we see the same look on these dailies on just about every chart. It's got these moves, it's got these gaps that everything is left behind, and it's got this continuation. So, look at Global Atomic. All things considered, look how strong it is. Look how far away it is from its 200-day moving average. So, while things like uh, the ETFs, which are just so close. Let me see what UEC is again. Yeah, UEC is still dancing around and fighting its 200-day moving average. You can't say that about global. Global is well above its 200-day moving average, and that's just, it's a testament to the strength. So, I mean, it's 16% above its 200-day moving average, where UEC is just fighting to try to get through it. So, yeah, strong name in the space coming up into really key resistance. So, Global Atomic makes another 20-cent move, and the Globe Boys are going to be pretty happy, right? So, and you got 418 and you got 441 to contend with. But strength in the sector, strength in the broad markets. One of the stronger names in the space. So it's not something I'm going to be really selling out of at the moment. I'm only a buyer of Global Atomic for the time being until I see something that tells me otherwise, and it's going to have to be probably some major space disruption or, individual to this company, like the Denison mine is shut down for some reason, or who knows, they get their permits pulled. Any one of those things could really put some damage onto this thing. So, but we'll see. Right now, it's super strong. It's been strong for a long time. I mean, just think about this. The markets are just getting destroyed, and the uranium names are all just kind of consolidating at their highs. So it's a great look across the board for the sector. And Global Atomic, in my opinion, is one of the best long-term charts in the sector. Boss Energy seems to be some interest in this one lately. Again, as much as everybody um, complains about Boss, I mean, look at it again. It's just another one that's consolidating up at the highs. So these are it's all good stuff. As bad as the action is, and I can understand because there's probably some FOMO people that got in at these highs, and they're underwater, and I don't blame you for not being happy. But right now, and the way I'm looking at it is that we have a monthly double bottom at $1.97. Here's the deal, though. This monthly low is not set yet. We need to see this monthly bar get over this monthly high to say, okay, the $1.97 in Australia is set. When's earnings coming? What happened there? So I didn't get to read the date. Yeah, March 15th. So we got a ways away for the earnings. Similar look to everything else in the space. This thing has been decimated. This was pretty painful for a lot of people. I understand that, but you have a good rounding bottom low with $1.97 as your spot. You're getting that 26 EMA crossover. This is another one fighting with that 200-day moving average, and we're going to see what happens there, right? So this 200-day moving average, commodities investors they use the older averages. I kind of use a mix of them both, but here's the reaction. It got over and it's rejected. And now it's below. It closed below the 200-day moving average. Can you make a call about this right now? No. It's get some consolidation here. That's healthy. It's pretty good. We got a gap down here. You're gonna throw this alert up at this gap. let's see if this gap, if it hits that gap alert, you know. But it's also the ASX, and it's a penny stock, so it could, gappiness is not all that surprising for that. Baseload, yeah. So look, monthly. Here's an example of a monthly low being set, right? So this took out the monthly high. So you can we can just say that this is set for now. That doesn't mean, oh, that's it. It's never going below it again. No, it's just you can now concretely say that this is a level that I could work off of if I'm working off the monthly charts. So the 38 cents on baseload is set. You have a monthly, it took out last month's level, and what are we in the middle of January? Yeah. So just take a quick look at the daily. It's going to look like all the other charts, right? So again, all the other charts, a lot of them have left gaps. That's kind of what we're looking at right now. So, it's running a little bit hot. It's a slight RSI divergence. Look how far away from the 200-day moving average it is. You can, and I've said this before, and I'll just keep saying it again. I mean, there's all sorts of metrics you can use to decide what name is stronger, what is. Look, it's 30% away from the 200-day moving average, whereas global atomic is what 20. What did we say? 22, 30%, 28% above, right? Where did it close? Okay, sorry, 15%. Okay, so there's a 45% differential between the two. So this is 30% away from its, what am I looking at? Baseload. 30% away from its 200-day moving average, whereas global atomic is 15% above it. So, you can just, with knowing nothing about the fundamentals on either of these names, they both have enough price history to say, okay, well, obviously global atomic is a much better company, right? So, again, gaps. This is TSX Venture, so it's just a penny stock, and that's a tough. I'm not a Canadian, but that is a tough exchange to trade on. So, I'm not doing anything here with baseload. I do have a position, because I have some shotguns. When I shotgun some of these small guys, and I just kind of let them roll, and that's pretty much what I'm going to do here. Maybe I'll take another look at it if we get a drawdown down there. So Fission 3.0, everybody's really happy with this one, right? And here on the monthly, it just took out this, pretty significant resistance. And, this is one of the, we can do something like this with this one because it's got some price history behind it. So this line has been support, breakdown, resistance. Now it's gotten through, and now it's using it as support again. So, anybody that entered in 2014, they're just starting to get whole again here. So, but it's probably not a lot, and there's, the volume profile is telling you that there's just not a lot of bag holders up here to try to sell into this move. But, you fundamentalists are going to go, well, who would sell into this move? They just had like one of the most insane drill results ever. And you would have a good point. I'm just telling you what the charts are saying. Your fundamentals are your fundamentals. Yeah, so it's a great move. And the consolidation is not a lot, This was a great spot to try to grab some more. And I think I took an initial position. I didn't nail this, but I'm somewhere in here. And I definitely sold. And that's it. I'm waiting for some sort of consolidation and some fundamental news. I think they're going to be having some more drill results coming up soon. URA is doing a rebalance this week. A lot of people are speculating that they will be involved in that. That URA may take a position, initiate a position here, and if they do, there's going to be millions of shares that are going to probably be bought to fill that up. So yeah, and as we know, URA has had some inflows this past week on and unit creation. So they have some money, and it makes some sense, right? So the money is front running into the rebalance, perhaps. Who knows? So that's the deal there. So Fission, it's running hot now. Again, sometimes a lot of times you don't necessarily always have to trade RSI, right? So if you're trading RSI here, you're not doing yourself any service. So you don't do it all. I don't trade RSI by itself, right? So this is a good example of what RSI divergence is, and we're just doing it as like, I don't know, educational purposes. Okay, so here's this trend line. Let's just look at an RSI trend line here. I'm going to try to get this bigger. Okay, so you can draw a trend line for this RSI like that, right? And then you can take this from that same point, and you can take this trend line and move it like that, right? This is called an RSI divergence. You don't trade it alone, but it's something that you have to, it's something you should always keep an eye on, right? So divergences do eventually like to fix themselves, but you just don't do it on its own. But it's good to see. It's good to know that it's there. And in my opinion, I always like higher time frame technical patterns. I consider them to have more strength, right? So you have an RSI divergence on the weekly. You have it on the daily. Do we have it on the monthly? Monthly is a little bit tough to tell. I guess you could say if you took it from all the way back here, it seems to be okay. So, stick with the weekly and the daily RSI divergences, and don't just use that as your sole trading mechanism, because that just doesn't make any sense, right? You want to use it in conjunction with other stuff. We have fundamental news. I know nobody's selling this stock right now. Because they're waiting for these drill results, and they're waiting for the potential URA rebalance. But that's the deal. The space in general looks pretty good, and let's keep the ball rolling, right? Over and out.